So does a bank customer have to divulge their salary when asked? What if they don't?
You don't have to, and it's important that you know that. It's a completely voluntary request. There are rarely consequences for people who decide not to update their income information. However, if the economy is looking particularly rocky and that lender wants to pull back on lending, you should know that you may be one of the people that they maybe reduce a credit line or close an account entirely if you don't provide them with updated information.
So it's better to give the bank a clearer picture of your financial situation.
Yes, the more that a bank knows about you, the more that they'll say that they can personalize their offerings to you.
So is there a risk here for the bank customer if they don't supply the information?
Technically, yes, but it's very, very rare that a credit card company will cut off a customer, either reduce their credit line or close their account without some kind of reason for concern. So, for example, if you've typically always paid off your balance in full every month and all of a sudden you start making only the minimum payment, they might be a little bit concerned. And then if on top of that you ignore the request for updated income information, you might be more likely to get cut off.
Is there a better time to tell the bank about your salary information than not?
Most of the analysts that I spoke to only recommend updating that information if your income has gone up or even stayed the same, because that might mean that you're more likely to get your credit line increased, which typically increases your credit score because it lowers your utilization. But even if your income has gone up by a significant amount and you feel like a higher credit line would maybe entice you to overspend, then maybe just leave it blank.
That's great. And yes, you reduce your utilization, which increases your credit score. People talk about that all the time. But then also keep in mind that when you raise your credit limit, let's say that your utilization on a credit card or whatever it may be, when you're trying to get additional loans for different things, so let's say just not a credit card, let's just say for like a car loan or a home or whatever, they're going to take in consideration your access to capital and how much money you have loaned out as a determiner of how much they can actually lend you additionally. So let's say, for example, you have an income of $300,000 and you have a credit card that's, let's say you have a limit of $75,000, right? If you try to get another credit card, they're going to say there's already $75,000 that you have available. We can't give you another $75,000 based on your income. We may just give you $25,000 or we may only give you $30,000. Those things are taken in consideration when talking about utilization. So sometimes continuously increasing the amount of credit that you have available may backfire for some individuals. Now, I'm not saying don't do it. I'm not saying that it doesn't lower your credit score, but if you are not using the credit already or you don't foresee any additional, you may want to consider keeping it the same if you are going to take out additional loans in the future, or you perceive that you may need to take out additional loans, whether you're buying an RV or maybe a rental property or something like that. You don't want to stretch yourself out so much that other lenders won't take the risk of offering you those services because you have access to so much capital. Okay.
Somebody fudges the numbers about their income. Does the bank have a way of verifying the data a customer provides?
Not really. Most of these requests, again, they're fully voluntary and they don't require any sort of proof. The only time you may be required to provide proof is, say, in a bankruptcy hearing, because if it comes out in a hearing or in another legal setting that you lied about your income, that's fraud. And analysts say that makes it less likely that your lender's going to work out a deal with you.
You have to tell the truth. A lot of these things, people think they can have a loophole, they can get more credit utilization and they can max out their credit card for some more free money, then close the card, claim bankruptcy, and that can be an issue. You don't want reprieve temporarily for dire consequences later on that could damage your whole financial career. I've said this many times, sometimes the small decisions that we make or we consider small when we're younger can affect us in the long run, whether it is claiming bankruptcy or get into financial trouble where you just refuse to pay someone because on YouTube they told you, oh, well, if you don't pay this, then technically you don't have to pay it. And then you end up hurting yourself because of what someone said on YouTube. So I think this is very important. Many people didn't understand this. This was the Wall Street Journal's podcast, Why Banks Want to Know Your Salary So Badly. I think it's very important to be transparent. And I think you have nothing to hide when you're talking about financial products and being able to access additional capital. As she said, the more they know about you, the better. Everyone wants to be shy and not talk about their salary because of, I don't know, this norm that's in, in your employers. But I think you have to take it with a grain of salt too. I think she did a really good job of balancing the two. these banks want to know how much you make, and then if let's say you're making 300,000, but they're not getting your direct deposit, they're going to send that to their financial advisors and their bankers to call you and see if they can get your primary relationship. So don't think that some of these numbers are just not used by the bank in order to get more balances or earn more business from you. They want to know. So they're like, well, he has 300,000 at this other bank. We need to try to get that over here. So let's call him. Let's offer what we can, trying to get those balances over here.